Hey, welcome back to my channel. If you're new here, hello. I am Valerie. I talk all things personal finance and entrepreneurship. And the good thing about today's video is there may be no student loans in the future. As of right now, Joe Biden may end up canceling $10,000 worth of student loan debt for everybody who has a student loan. So that could be very, very helpful for a lot of us, and that could actually pay off the entirety of some people's student loans. So you might not even need to know this stuff that I'm about to talk about, but if that does not happen, then proceed with the video. Okay, so full disclosure, if I had known about the amount of debt that I would be in after graduating from college, I would have thought long and hard about actually going. Just being honest, okay? Full disclosure. I know that's controversial, but I'm just being real, all right? But the good thing is I married somebody who's very responsible and good with money. So I was able to pay off a loan, a personal loan, actually a private loan that was $7,000 and around $10,000 worth of my federal student loan in a single year. So stick around to find out how we did this and how you too can start trimming off that freshman 40K that you gained years ago. It's time to get to work, okay? So the first loan that I want to talk about that I was actually able to pay off completely was a private student loan that my mother took out for me while I was in school. I think the loan started out at like $10,000 or something, and only $3,000 of it was actually paid off in the course of 7 years. And it just kind of drifted into collections and no one knew how it got there. Happens, doesn't it? A lot, too often, but I know you can relate. I mean, you know, if you're watching this video, I'm sure you can relate. Hey, we all got it. We all got debt. We all got collectors calling us what it feels to be an American. So, okay, it drifted into collections, and then one day we got a piece of magical mail in our mailbox that said, "You owe us." And I said, dang it. At this time, it was really frustrating because we were really trying to get ahead of our existing debt. So this just added another weight, an anvil around our neck that we had to deal with, okay? But we handled it, all right? So the good thing about this loan was that the monthly payment was very low. It was like $60 something, okay? So what we started doing was we started paying a little bit over that monthly payment. And then we started saving money in the background. So eventually we paid the loan down enough to where we could just pay off the rest of the loan in a lump sum using our savings. Now, I do want to say there is something that we could have done that we did not do that I want you to know about. This is an option for you if you are in the same situation. We really could have negotiated with the collections agency for a sum lower than the amount of money that we actually owed in exchange for paying it off in full. I've done that before personally with the credit card, and it worked. So they'll negotiate with you if it's a good enough, a reasonable enough price, but it's actually going to be lower than the amount that you owe, because honestly, it collected interest anyway. So it's a win-win situation for the both of you. But in this case, we did not do that. We just paid off the remainder of the loan and just went about our business. Okay, so now for my other loans, my other student loans that are actually federal student loans. Okay, because the other one was a private student loan, this one was federal. We were able to pay down a good amount, a really good chunk of my loans, because I initially consolidated my loans after I graduated from college. So consolidation basically is just you lumping up all of your loans in one monthly payment, so that all you have to do is just pay one monthly payment, and then it gets dispersed amongst all of the loans that you have. And I honestly didn't even know when I graduated from college that I would have several different lenders representing my federal student loan, but it's actually a thing. Okay, I had like 12 or something. It was weird. I didn't even know it was like that, but it's a thing. So consolidating helps by, number one, making it easier for you to make your payments, okay? Because you're just making one payment a month, okay? And number two, a lot of the times when you consolidate your loans, you end up having a much lower monthly payment, okay? It's like it almost gives you like a discount, on your payments, okay? The repayment plan that I was on at the time was like a graduated payment plan, I think, but it was like one of the lower ones. And the payment amount goes up like not very much, like every 2 years, I think it was. And it's not based on income, which is a very important thing to consider when choosing a repayment plan. And I'll talk about that more on that later. So my monthly payment amount remained pretty much the same as it was once I graduated. It was a little bit more expensive, but it wasn't that much more, okay? And I wanted it to stay the same because it was low. It was like $230 a month. Now, I did have the option to apply for an adjusted rate based on my current job, but that would have increased my monthly payment, and they do not tell you that. They make it seem that like when you apply for this new adjusted rate that it could benefit you because you could possibly get your loan forgiven, you know, or just have a much lower monthly payment. But I've seen people who applied for this with the intention of getting a lower monthly payment, and actually their monthly payment doubled, if not tripled, after they did that, okay, because they saw how much money they were earning a month. Definitely do not fall under that trap if you know that your income has increased. If your income has not increased and it actually decreased, then you probably will need to apply for that, because that way your payment can be a lot lower. And so you may be thinking like it could actually be a good thing that your payment increases, because then you'll be able to pay off your loan much faster. But here's the way I think about these types of things, okay? If you are in debt and your debt to income ratio is high, then that means that you need to retain as much cash on hand as possible in order to save. And the way that you do that is you try to find ways to decrease the amount of money you're spending on your bills if you do not have any extra money coming in. I talk a little bit more about that in this video right here. Okay, here. Because the way that I look at it is that you want to have full control of your finances. And while yes, you may be able to afford a higher student loan payment each month, you don't want to take any extra money away from your savings if you can help it. Because here's the thing, you can always pay more on your loan every month if you want to. You can pay down your loan by paying on your principal, or just by paying more on your loan every month. I mean, it's an option. You have that freedom. So the thing is, you need to have total control. But you protect yourself just in case you have like an unplanned bill that comes up, you know, that you have to pay for now, and your cash flow is getting low per month. Well, if you make sure that all of your payments, all of your bills are as low as they can possibly be, then you should have more wiggle room to deal with those things, right? So you always want to make sure that you do that. Pick the lowest amount possible, even if you can afford more, and just pay more on it if you can. Again, always try to negotiate a lower price, even if you can afford more. Okay, and there's certain instances where you can't do that because you don't have a choice, but a lot of times you have a choice. And and like with the car, for instance, like the car video that I did, you may be saying, well, I already have a car now, I can't, the only thing I can do is just like try to refinance it. But that's, you know, that may not happen because my credit score is not good enough. Well, in retrospect, if you were to have gotten the car and you would have negotiated a much lower monthly payment, or maybe would have gotten a cheaper car, that's how you have control. That's how you can make sure that your monthly payment is always going to be low, regardless of what your credit looks like. There's ways to control it, right? You can control that. So just a little tip. So for my federal student loan, we started paying off a few of the smaller ones, and then we just started picking them off one by one from smallest to largest. Also, it's important to make a note that even though my loan was consolidated, you're still able to pay on each of those loans, each of those lenders individually if you want to. Like the federal student loan website that I use, it'll actually show each loan individually and how much money I owe on each one. And so all I did was just pay on each one individually. And so that my monthly payment, it was equal to my monthly payment, but I was just making sure that I paid more on, you know, smaller ones so that I got those out of the way quicker. And then eventually, before you knew it, my loan amount went down significantly from doing that, okay? So just because your loan is consolidated does not mean that you can't pay on each one individually. So if you got some value from this video, if you liked it, give me a like. If you want more content like this about personal finance and building generational wealth for you and your family, please subscribe, help your girl out. And until next time, friends, bye.